So today I'm going to be showing you how to draw a bat pattern. For those of you that don't know, a bat pattern is what's called a harmonic pattern, and all that is a natural point in the market where several Fibonacci numbers line up and create basically a natural point where the market is likely to have a reaction or even sometimes completely reverse. So a bat pattern, the most important point in all of these patterns is the B point. The B point defines what the pattern is going to be called. A bat pattern, a crab, a butterfly, it's all here in the B point. Now, specifically for the bat pattern, the B point must be in between 50 and the 382. Now, it could be on the 382, on the 50, in the middle, it doesn't matter as long as it's touching the 382, touching the 50, or anywhere in between. Now it can go past the 50 and it can go a little bit short of the 382. The general rule of thumb is plus or minus 5. So if it's 5 percentage points short, it's still a valid pattern. And if it's 5 percentage points below the 50, it's okay. It's still a valid pattern. So that's the B point. Now we move up to the C point. The C point is less strict. With almost every pattern, it's the same rule. You measure retracement from A to B, and the C point can be anywhere in between the 382 and the 886. Now the D point is where you are supposed to buy or where you're supposed to sell, depending on if it's a bearish or bullish pattern. A good way of visualizing it is that the bullish patterns have an M-type structure, sort of like this. This is a bullish structure, and the bearish structures have a W-type pattern. So here's a this is a bullish bat here, and this is a bearish bat here, MW. So the D point, since this is a bullish pattern, we're going to be buying at the D point. Now, I'm going to go over how to manage the trades, but just to get it out there, you're not supposed to set a limit order at the D point. So what the D point is an 886 retracement from X to A, basically the entire pattern. It's an 886 retracement. This is the completion point of the pattern, and we'll go over what to do once price has actually reached this point. Okay, so just for example purposes, I've drawn in my own little chart. So we're going to go over what to do when price actually reaches the 886. So this is crucial. This is how you actually enter a harmonic pattern. And this is where most of the false information lies. I mean, so many educators say that you're just supposed to set a limit order at the 886, wait for price to come down, and boom, you should be good. But that is not how Scott Carney, the creator of harmonic patterns, that is not how he teaches it. That is not how you're supposed to trade harmonic patterns. The correct way of trading harmonic patterns is using what's called a terminal bar. A terminal bar, all it is very simple, is the first candle to touch the 886. Really, technically, it's the first candle to touch all three of the numbers found in the PRZ, but that's a little bit more complicated. So for example's sake, we're just going to say it's the first number to touch the 886, because in general, that'll work out fine. So in this instance, in this example, first candle to touch the 886 would be right here, this little red candle right here. So now we would mark the low of that candle as basically the level that we do not want to see price get past too much. A lot of the times, price will in fact overspill. It'll get past this price point, but we don't want to see it exceed too much, or else the pattern will be invalid. Really, if you just see something just blow through this level, then you're not going to trade it at all. That's where a lot of people don't understand that setting limit orders can put you in trouble, because a lot of times you'll see just price go boom, just go right through, and you would be executed and you would be stopped out pretty quickly. So the better way and the correct way of trading harmonic patterns is to wait for the terminal bar, which is the first candle to touch the 886, the completion point. Then we wait for bullish evidence. Basically, we look for bullish price action. So we see, I don't know, a wick down here, we get some rejection, we get a green candle here. Now this is interesting. Now we want to look to buy, because we know that this level seems to be holding. Just like any support and resistance level, we wait for it to hold. Now, technically, you would put a limit order down here. I mean, it's all personal preference. Usually, I would put an order down here next to the terminal bar low, but you could be a little bit more aggressive, and as soon as you see a bullish candle like this, you just hit a market order, you would buy right there. Okay, so now we're going to go over how to actually execute the trades. So where we left off, we had the terminal bar. Now, the terminal bar, we would want to execute as close as we can to the terminal bar low, which is this dotted line here. So after seeing some bullish price action, we would set a limit order right around here. Okay. Say we set a limit order right around there, and now we target the 382 of the entire pattern. This is the first target, but it is a majority of the time the pattern will get to this target and reverse. So 90% of the time you want to take at least half off of your position at the 382, if not all of it, because 90% of the time you will see it hits the 382, doesn't get past it, and continues in the direction. But your first target is the 382 from the A leg down to the D leg, the entire pattern. So let me draw it out again. The targets are from A to D, retracement from A to D at the 382. So our risk reward would look something like this. Our stop loss can either be below the X leg, or if you want to be more aggressive, you can make it below the terminal bar low, something like that. And so as you can see, harmonic patterns can provide very good risk to reward ratios. Now once price actually hits the first target, you should take half off, and to trail the rest, what you want to do is simply draw a trend line. Now if price breaks this trend line, let's draw it out. If price reverses off the 382, breaks that trend line like that, then you want to take the rest off at the break of the trend line. But if all goes well, price will hold the trend line and continue on to the second target, which is the 618. So then you would take the rest of the position off at the 618 right here, and that would be a completed trade from start to finish. That is how you would execute, that is how you would measure a bat pattern. Okay, so now we're going to look at a real life example. This is on pound US dollar. Here we have a bat pattern. As you can see, the B point is at the 50 level. Here's the 50 level right here, and C point did not get past the 886. It's at the 618, so we're good there. And finally, the D point is an 886 from the X to A leg. Okay, so let me draw that again because we're going to need it to see the terminal bar. So as you can see, the golden line is the 886, and you can see the first candle to actually touch the 886 is this big green candle here. It's marked by that little purple star, so that is our terminal bar. We would draw a line. That would be our terminal bar high, because this is a bearish pattern, so this would be our resistance level. And we would want to execute as close as we can to this level, but a lot of the times you can exit a little. I mean, you can enter a little bit lower, a little bit higher, and it'll work out fine as long as the risk to reward is good. So here's our first target down here. So if we were to enter, let's do some risk to reward. Say we entered here. All right, so why would we enter there? Remember, we get the terminal bar, we get the bearish confirmation, we get the bearish price action, and we decide that the pattern is valid, and we're going to take the trade. So we jump in the trade, we put our stop loss above this terminal bar high, we're short, so our first target is the 382 measured out from the entire pattern. Let me manually measure it out just so you guys can see. Let me get rid of this one. So we take it from the A leg down here all the way up to the very top of the pattern. Don't go short, don't go to wherever the 886 is. Measure it from the very low of the pattern to the very high, depending on whether it's bullish or bearish. If it's a bullish pattern, you would do it from the high to the low, from the low to the high, from the high to the low. And if it's a bearish pattern, you would do it from the low to the high. I don't know if that makes sense, but whatever. So we've entered here. Our stop loss is above the terminal bar, and if we want to be more safe, we can always do this, do it above the X. Either way, we get about a 2-to-1 risk to reward on this trade in particular. Now, I want you to notice this, nope, that is not supposed to be there. I want you to notice what happens when price actually hits the first target, which is around here. You probably would have gotten filled here if you had your target or half off right here, but I mean, this is the first time it actually really hits the target. You see an immediate price reversal. Now, if we were in this trade, if we took this trade, we would draw a trend line sort of like that. We would take half off here, and we would most likely have taken the rest off here, but had you not, we don't know yet because this pattern is still active. But for the sake of education, it's just like we saw before. We enter the position here, we take off half here, and this trend line gets violated, so we would take off the rest here. Now, if this trend line never got violated, or say we kind of fudged the trend line like that, we would still be in this trade, and we would take the rest off at the 618. So that is how you properly measure and properly trade harmonic patterns. That is straight from the creator himself, Scott Carney. I've been working with Scott for about a year now, so I can confidently say I know what I'm talking about. And hopefully I've helped some of you get rid of the myths in your head about harmonic patterns, and hopefully you can successfully trade them in the future. Take care.